Hello everyone, and welcome to my February 2026 real estate market update here in Metro Vancouver. I am going to go through all the stats that determines how active our market is and give you some forecasting on where I think we're going. It took a while to get all the stats together. Then there was about a 24 to 48 hour shock recovery period from analyzing the January stats. Let me show you what I have seen, and you will be up to date too. So let's jump right into it here. If we look at Metro Vancouver, we overall have a very soft start this year. Now, I know I anticipated that recovery to take off, and December looked very promising, but there is a little blip that we've hit in January. I'm hoping we're going to get that through covered and recovery in the month of February. So let's just look at what's happened over the past year for detached on my table. The sales activity year over year for houses in Greater Vancouver, are down 21% from this time last year. Prices are down on average in Greater Vancouver for houses 7.3. That percentage is quite a bit higher when we take other product categories and general areas into account. We'll see that. The benchmark price last month dropped 1.5%. So significant drop last month in pricing. We were normally below 1%. Attached townhomes and half duplexes, activity is down year over year 23%, significant drop in activity, and prices down 5.4% Greater Vancouver, and last month we had a drop of 1.2%. On attached apartment and condos, 23% drop in activity, pretty consistent overall compared to January of last year. And as you remember, January was kind of that month where we didn't really realize what was happening, and then it really hit in February. So we had a pretty good January last year. So that is a 23% drop. Year over year benchmark pricing, almost 6% in condos, and last month, 0.8% drop. Okay. Let's look at each specific area that I like to focus in on for Vancouver. And what I use for the metric is the sales ratio. And all the sales ratio is the absorption rate into the market. What percentage of homes are selling over the past month in different areas and different price categories? So let's talk about that. I need that espresso. Get me going. It's a little bit wet out there today. Waiting for that sun to come back. So overall in Metro Vancouver now, listings are up to 6170. Last year this time it was 5860. Sales down by 536 units. Last year, we're at 536, and last year at this time we were at 787 for January. Sale price down about 9% year over year from this time last year. So that's general for Metro Vancouver. We're going to look at some more specifics. If we look at detached houses, West Side, there's what happened all of last year. We hovered in that buyer's market territory. The highest point being in December, January, things look promising. Then we dropped down over last year. And then in January, just coming into the year, we had a 10% sales ratio right at the top of that buyer's market category. Now, if we look at what happened last month, we have dropped to 5%. So the activity in West Side houses dropped in half last month. Unfortunately, what's going on? Why are those buyers hesitating? We'll talk a little bit about that, but that is strong buyer's market category for houses West Side. Let's look at condos, townhomes West Side. There's what happened last year. We had good activity, high balanced activity throughout the year. January, again, coming into the year, very promising. If we look at the stats, just at the end of last month, we're at 10%. So we have dropped from 17 to 10%, and we are back in buyer's market territory for attached west side. In addition to the detached we just saw, let's look at downtown condos, townhomes, decent activity, right at the top end of buyer's market and in some points jumping into balance last year. Last month we were at 15%. This year activity downtown has dropped down to 9%, and that's in buyer's market territory. Again, so far 3 for 3. Going into detached houses, Vancouver East Side. Come on, East Side, affordability. Let's see how active that was. Pretty good year, some balanced, some top of buyers. And last month we had a 12% sales ratio. Unfortunately, this past data that just came out is down to 7%. So we saw that slide a little bit and still in solid buyer's market territory. For detached houses east side, hottest market last year was attached condos and townhomes on the east side. You can see how active that was. January was at 28%. Crazy. Then it was high balanced, back into a seller's market. December was 20%. January was 18%. Let's look at the data as of the end of January. Unfortunately dropped down to 12%, but still just into balanced market territory. The only product and only area that's in balanced at the moment. Okay, now what happened here in terms of the sales ratio across BC? You can see we had that crazy period just after COVID, settled down into balanced. We had a bit of a recovery. The data isn't out yet for BC for the last month, but you will see that drop. If we look at the west side, sales ratio, for townhomes, condos, and detached, you can see in December, they were all showing really good promise coming into the year. And then, boom, we've had a drop in January. There's no hiding the fact that activity dropped off in all 3 product. On the west side, similar story. On the east side for all 3 product, apart from townhomes fell in December for some reason. We showed some promise, especially for detached coming into the year, and then boom, all 3 dropped down into buyer's market territory, except of course for condos. That's just barely above that plateau. Okay, what's happening with prices? Let's talk about pricing, because activity and pricing could be 2 very different things. Here's our average price graph since the beginning of time. You can see houses peaked out there back in the 2022, and last spring we had a very good spring. We're down from that. Townhomes, pretty stable. Condos, fairly stable. Not much change in those 2 product categories, but if we take everything into account, we are down about 10 to 15% from those previous peaks, depending on product and depending on area. So 10 to 15% down. What's happening in the burbs outside of Vancouver? Remember last month when we looked at the data from December, we had a lot of green on the screen. That green has disappeared. Only 3 areas have showed an increase in activity. Sorry, there is a 4th in yellow. North Vancouver, West Vancouver, New Westminster, Ladner, and Mission showed pretty good promise, no change or more activity. Everything else dropped in activity for detached product throughout the lower mainland. So you can see a general downward activity trend throughout the lower mainland. If we look at attached product, same story. We've got West Vancouver, North Delta, and Missions showing an increase in product, activity sales, but overall on all of those outlying areas in the lower mainland, we have had decreased activity over January. So this is across the board, like a big hammer came and hit the market in January and froze everyone, like the freeze gun in the Minions. I love that scene in the coffee shop. Anyways, average prices throughout BC, we can see that sort of jagged sawtooth. No big change there, but typically we're down 10 to 15% across the province as well. So what is going to happen for the rest of spring? I anticipate that recovery, that stability first, then the recovery to happen. Let's see why I'm saying that. If we look at the drivers, market enhancers are in green. Market deterrents are, of course, in red, the factors we follow. If they're transitioning, they're in orange. Last month, we saw at the end of December, we had consumer confidence in orange because it was transitioning from red to green. But unfortunately, we've dropped back into red. Consumer confidence is the one factor that has fallen dramatically in January, and that's what's caused the major slowdown in the number of sales. Now, inflation's good. You'll see later we're at 2.4%. Economy's stable. Nothing major happening there, apart from some fear. Cost of borrowing, rates are stable. They're not changing. We'll see that. That's actually a good thing, and we're historically low. And of course, inventory levels are low and stable, but increasing, and that's typical for the new year. We'll start to see more and more listings come online. We've been busy. We've listed a whole bunch of product coming on for February, this month, and of course, March. So we're anticipating that activity to bounce back so those listings will sell. That's the one we're dealing with now. We've got to get that confidence back. So there's the consumer biting their nails. Let's talk about unemployment. Unemployment's not bad, 6.5% for Canada, 6.1% for BC. So no alarm bells there. Retail sales are strong. People are still spending. And there's nothing to be concerned about there. Same with the monthly GDP. We've seen some relatively good numbers come out in the GDP. So again, no alarm bells there. Thus, Bank of Canada is just holding steady, and we'll talk about that in one of the following slides. Rental rates have gone up slightly. That's a good sign. Last month, they were $2.94 per square foot. This data that just came out is just over $3 a square foot, and you can see that trend now stabilizing in the rental rates. I think you're going to start to see that slowly increase once that inventory starts to get eaten away. So it's about supply and demand for rentals as well. Commercial leading indicator, commercial real estate's doing well. There's been a good recovery over the last year. So that's good news. And if we look at inflation, as I was mentioning, we had a slight jump. We're at 2.4%. We were at 2.2%. That Canada overnight target rate, Tiff Macklin, has held at 2.25%. So again, that's pretty good news, and they're likely to hold that rate according to what they're saying in their news media casts, that throughout 2026, they don't anticipate much change. That's actually good news for consumers because consumers like stability, as I mentioned last month. So this is all good stuff. There's nothing alarming there. So this is going to hold. If we look at the inflation rate, consumer price index, here's where we are now. Remember, there's where we were in the crazy post-COVID hyperinflation. And we're in that Bank of Canada happiness band, I call it, between 2 and 3%. No alarm bells there. That's all good. So nothing major happening in those areas. What's happening with our neighbors next door? Apart from everything else, just talking about rates, we're pretty similar in our inflation. They're at 2.7%, and our overnight rates, not too far off. We're at 2.25. They're at 3.64. So again, not a lot of volatility there, holding pretty steady. They're holding the course. So again, we're in sync. That's good news, and that's going to hold for most of the year. So let's talk about the cost of borrowing. Again, if the overnight rate is holding, that means the variable rates are holding. If the economy changes and the bond rates change dramatically, that could affect our fixed rates. But again, for all intents and purposes, the forecasts are that rates will hold steady as they are now. And again, overall for activity and consumer confidence, that's a good thing. People like the certainty and the ability to forecast where rates are going. So that's not negatively impacting. Here's what happened with that overnight rate. Here's COVID, whoop, and then whoop, hyperinflation, whoa, and then down to where we are now. And for what we're seeing, that's going to hold steady for most of the year, barring any unforeseen circumstances. We shouldn't see much changing in this area for 2026. So the buying power for today's cats, there's our cats out there with cash in hand, purchasing property. That's the same. Let's use a 4.09% rate for a 5-year mortgage. We're about $533 per 100,000. Borrowed, $5,330 per million. That's the number we're using when we're out looking at property. And inventory levels, let's look at where we are for different product, different areas. Vancouver West Side houses, as expected, we hit that low in December and we saw an increase of about 60 homes come on the market on the west side. So we're starting to see inventory slowly grow. Vancouver West Side apartment condos, same picture, 634 last month, up to 716 listings this month, so slow growth. Let's go into the east side for detached houses, 416 last month, and an increase up to 468. So again, east side apartment condos, same picture on all product, all areas. We're starting to see the inventory build as we enter that spring market. Okay, active listings across BC. Let's look at what those look like. You can see we had that peak of activity, the listings dropped a bit, and then they're starting to climb in the new year. Just a little bit of a tick up there across the province. Now, new product inventory. This is really interesting because I came across this graph of all new product. These are apartments. And these, of course, are all new product throughout the years. How much inventory is across BC at any given point in time? You remember those major high inventories and the market pricing drop in the 1994-96 range. And then, of course, we had low inventory and crazy markets in the early 2000s. Then we had the savings and loans crisis, 2007, 2008, and the inventory shot up because no one was buying and prices were falling. And you can see we had a peak there of about 7,000 properties all in the province. Then that slowly dissipated and got bought out and the inventory disappeared. We had another peak in 2020, of course, over COVID. That got sold out, and now we've had a steady climb since 2023, and we're actually equaling that peak that we had back in 94 and in 2013. So the problem with this is all of the builders and all of the developers are not starting projects now, thanks to a lot of factors, obviously one being the market, government costs that they're paying when a development goes in are upwards of 30-40%. The developers can't pay those costs because the consumers won't pay those costs. So they've smothered the market. That's certainly not helping. So everybody's holding off on building starts, big, small, mid-size, and we've got this major inventory increase here for new product we're talking. Okay, it's very important, just new product. So what's going to happen is eventually this will recover like this. And when it does, and that demand comes back, and that inventory disappears, the problem we're going to have is there'll be nothing new in the pipeline because everybody stopped building. And that's a problem because what happens then, you have no supply, you got high demand for new product, the prices take off again, and guess what? You have unaffordable homes again in BC or across Canada for that matter. And that kind of goes against what the government was trying to accomplish. And it's really fortuitous that this is happening because right now the same pattern is going to repeat, and we're going to hit a point in the next couple of years, 2, 3, maybe 4 years, where we're going to see that product pricing just take off because there's not enough inventory to meet that demand. So that is kind of interesting to see. A little bit of summary there about what I just talked about, but you can see that pattern, pricing, inventory, and demand, how that all just goes through another cycle, and we're right at this cycle that we were at twice before recently. So that's kind of interesting. So what's next for pricing? Let's talk about that. I think we still have a significant amount of pent-up demand. Here's a good solid year in 2021. Here's what we've been having. So all of those people that would have bought back then didn't, and we had, let's show that again. Sorry, let me go back to that slide. You can see that pent-up demand coming in for people that did not buy. All of these people that normally would have bought did not and haven't started yet. So that is still to come. And when that market does start to take off, you will see that activity and pricing rise again. First, we're going to have that stabilization. So again, across BC, here is the sales. You can see we had that slump last year. Let's take this section and blow it up. We had the demand here drop into the year, and then we had that recovery. Of course, I called that the Trump slump. And what we're having now is another drop in activity, and I'm hoping that's going to see some stabilization in February, March, and then come back. Maybe we'll call that the Trump bump. We'll see when that actually happens. Hopefully in the next month, we're going to see that happen. We're still seeing a forecast of about 14% for activity this year over 2025. So that's good news. And in conclusion, if you look at all the factors that I watch, the mortgage rates, the inventory levels, and the consumer demand are really what determines how strong our market is. The Bank of Canada is holding that overnight rate for now, and that's giving stability. That's actually a good thing. The inventory levels are stable, they're low, and they are starting to increase as we get into spring. Nothing dramatic happening there, but the consumer demand is suffering. That's the big cross, the red mark in what's stifling our market right now. People don't have the confidence to go out there and spend lots of money. That will change. That big pent-up demand will come out. So we've had that sharp increase in volume in fall. That shows that there are people out there wanting to buy. The pent-up demand is at an all-time high. The predictability of those extended rates are a good thing. But again, the world order and economic uncertainty are freezing many consumers from taking action. So here's what I think is still happening. 2026 is still going to be a recovering market. It's just been delayed a little bit. And we're expecting stabilization first and then recovery. I think you're going to see that over the next couple of months. Bear with me, and I will report that every month to you. So that's my market update for February 2026. You can watch this on YouTube, Instagram, or Facebook. If you prefer just audio, I'm on YouTube Music, Apple Podcasts, and of course, Spotify. Thank you very much for joining me today. I'm Marty. That's my February market update. Take care.